Welcome back to Alpha Recap, your post-market wrap from stockalpha.ai. Markets closed for the day, and we're here to unpack the biggest moves, themes, and what to watch next. As always, if you have questions, you can reach us at stockalpha.ai.
Great to be here. We've got a pretty packed session. Regulation, bank income, satellite broadband, data centers, a cluster of lawsuits. A lot to chew on.
So what really stands out here is the EU order around WhatsApp and how that rippled through AI names. That was the headline everyone woke up to.
Right. Regulators told Meta to let rival AI chatbots access WhatsApp. That was a clear signal that Europe was willing to force open platforms, and markets responded pretty quickly.
We saw immediate market reactions. Meta moved sharply, and competing AI stocks got a lift. Analysts noted this crystallized regulatory risk for dominant platforms and accelerated the competitive shift in conversational AI access.
I mean, when you step back and look at this, messaging is a huge moat for Meta. Letting other chatbots plug in lowers that defensive wall. It doesn't mean instant disaster for Meta, but it removes a layer of control.
Exactly. And at the same time, Alphabet rolled out its latest, Gemini 3.5 Live Translate, a real-time speech translation feature aimed at both consumers and cloud use cases. Product innovation kept pace with the regulatory headline.
Which is funny in a way. Product teams launching new features while regulators are saying, hold on, make that open. The number that really mattered there was the framing. Google was emphasizing cross-platform integrations, which matters in an open environment.
The key takeaway was the tension between product differentiation and imposed openness. Analysts point out that being forced to open up can blunt a walled garden advantage, and it makes monetization tougher unless companies find new ways to charge for services.
Right. And the other thing is, if rival chatbots really get access to WhatsApp, that becomes a battleground for monetization and developer ecosystems. Partner SDKs, revenue sharing deals, all that technical plumbing we tend to geek out over.
Quick reactions. Big move.
Not what anyone expected.
Moving into macro and financials. Wells Fargo flagged a step up in interest income for the second quarter, which is important because it signals that the higher rate environment was still feeding into bank revenue.
Yeah, banks finished the day reacting to that commentary. Analysts noted that higher interest income helps top lines and can improve margins for lenders if deposit costs don't rise at the same pace.
Let's break that down for listeners who don't live in spreadsheets. Interest income is what banks earn from loans and securities. Net interest margin, the spread between what they earn and what they pay depositors, is the key driver. So when loan yields moved up faster than deposit costs, bankers saw a welcome bump.
Exactly. It's not instant, but it's meaningful for earnings this quarter. Analysts will be digging into loan yields and deposit cost detail to see how durable that step-up looked.
And on the asset manager side, Invesco reported month-end assets under management at about $2.4 trillion as of May 31st. That was a solid AUM uptick and a reminder that fee revenue was getting some support.
When flows show up, fee math benefits managers. Operating leverage kicks in, and that can help margins. So between bank interest income and asset manager flows, parts of financials had a better tone.
Yeah, that tracks. Analysts will be looking for granular Q2 disclosures from Wells Fargo on loan yields, deposit costs, and how that changed net interest income.
And Invesco's note on AUM will have people asking whether that was broad-based or concentrated in a few strategies. Flows mattered for short-term earnings narratives.
Switching gears to infrastructure, satellite broadband and data center demand were front and center. Starlink's push into in-flight Wi-Fi put satellite providers back in the headlines and pushed re-ratings for suppliers.
Airlines want better connectivity, and if Starlink or Amazon's units land big deals, that means multi-year service contracts for suppliers. That feeds into vendor revenue visibility. Believe it or not, in-flight Wi-Fi is now a real commercial battleground.
It's amazing. And another piece, engineering rankings showed Gray rising in construction rankings, which is a sign of sustained data center build activity. Data centers are capital-intensive and multi-year, so construction demand is a tailwind for contractors and data center REITs.
We also saw some smaller but telling wins. Fatbeam picked up an E-rate contract with Boise Independent School District, and RapDev won a partner award from a big observability company. Those are directional signs that broadband and cloud observability ecosystems were getting traction.
Put simply, more connectivity demand feeds cloud growth, which feeds data center demand. Contractors and vendors that captured deployments could see extended revenue runs. Platform winners that lock in enterprise customers via observability and ops tools could see stickier demand.
Which means watch announced airline contracts, vendor selection timelines, and any backlog disclosures from contractors like Gray. Those announcements confirm the narrative rather than just hinting at it.
Short reaction.
Right.
On litigation and governance, law firms issued multiple class action solicitations for a handful of companies. Investors in SES AI, LKQ, Regencell, and the Ensign Group were all targeted for lead plaintiff opportunities. There was also a firm launching an investigation into Ensign after a short seller report.
That cluster of notices was notable. It highlighted that event-driven legal risk was concentrated in healthcare, auto parts, and certain AI or small-cap names. Litigation risk can create direct cost pressure and distract management.
Right. And those risks can compress multiples and widen bid-ask spreads for the affected names. What to watch? Court filings appointing lead plaintiffs, any SEC inquiries, and company responses to allegations.
Also keep an eye on trading volume and short interest moves in those names. Market mechanics often reflected litigation sentiment quickly.
Quick reactions. Honestly, I was a bit surprised by this one.
Yeah, me too.
Now let's hit the rapid-fire updates, short and to the point.
FS Credit Opportunities declared a monthly distribution of about 6 cents, payable at the end of June. An income calendar event for yield-focused investors.
Morgan Stanley reiterated an overweight on Corteva, which was more of an analyst conviction than a market mover.
Longeveron received EMA SME status in Europe. That's a regulatory milestone that can affect grant eligibility and partnership opportunities there.
Rocket One filed for patents on an AI-enabled autonomous defense and space platform, an intellectual property push that could change comparables in defense tech.
A small note. Conva launched a risk context engine for commercial property and casualty underwriting, with reported model performance gains. If adopted widely, that's a potential margin lever for insurers.
Coca-Cola's executive vice president sold about $7.9 million of stock, a sizable insider move flagged in filings.
On the ETF front, the Bitcoin-linked ETF we tracked rose about 5% on heavy volume, well over 200 million shares traded, showing renewed momentum for crypto ETF flows.
And the leveraged bearish ETF we saw fell about 2.5% on very heavy volume, nearly 457 million shares. That suggested concentrated selling in leveraged products.
Those flow dynamics pointed to bifurcated capital movement. Institutional flows into asset managers and crypto ETFs on one hand, concentrated selling in certain leveraged products on the other.
Let's synthesize the patterns we saw today. First, regulatory pressure on big tech was tangible and actionable. Europe was again leading on forcing platform openness, which reshaped AI competition.
Second, infrastructure demand looked firm. Data centers, airline connectivity, and K-12 broadband wins all suggested persistent capital expenditure cycles across telecom and construction supply chains.
Third, legal and governance risks were clustering, especially in healthcare, auto parts, and certain AI-linked small caps. Event-driven volatility looked likely to persist for affected names.
And finally, capital flows were bifurcated. Asset manager AUM strength and ETF momentum in crypto coexisted with concentrated selling in some leveraged products, suggesting differentiated sentiment across asset classes.
So what should listeners be watching tomorrow? First, Meta's official response to the EU order, whether they plan to appeal, and the implementation timeline.
Also, Wells Fargo. Any granular Q2 detail on loan yields and deposit costs will help quantify the interest income story for banks.
Keep an eye on the Bitcoin-linked ETF for volume and price follow-through to see if crypto ETF momentum sustained.
And for the litigation names, watch court dockets and company filings for lead plaintiff appointments or responses. Those filings were often the first real catalysts.
Plus, Invesco commentary on what drove May AUM growth, whether it was broad inflows or concentrated bets, would be useful.
And finally, any announced airline vendor wins or contractor backlog updates, Those confirm the infrastructure narrative rather than just hinting at it.
All right, let's close with the key takeaways.
1. Europe pushed platform openness, and that changed the competitive landscape for conversational AI. Product wins will have to survive in a more open, regulated market.
2. Pocket-level relief in financials. Wells Fargo signaled rising interest income and asset manager flows were helping fee revenue. So parts of the financial complex were starting to price in higher rates.
3. Infrastructure demand remained a multi-quarter theme. Satellite broadband, airline Wi-Fi rollout, and data center construction supported vendors and contractors.
4. Litigation notices produced idiosyncratic risk for certain names, and those legal developments could mean sustained volatility until resolved.
And 5. Capital flows looked mixed. ETFs and asset managers saw pockets of momentum, while leverage products experienced concentrated selling.
Those were the headlines and the themes. Remember, this briefing was informational. Analysts note this is not personalized investment advice, and you should check primary filings and company disclosures if you're making decisions.
If you want to dig deeper on any of these items, send us your questions at stockalpha.ai. We'll answer directly and can follow up on specifics in future episodes.
If you have questions about anything we covered today, head to stockalpha.ai, where you can ask us directly and we'll answer live. For more market analysis and insights, visit stockalpha.ai.
Thanks for listening to Alpha Recap. We'll be back after the next close to break down the tape and what mattered.